If you're holding the cash itself, that's obviously a currency derivative. It's collapsing in value. I think last I checked, real estate in Florida has escalated in price 500x over 90 years. 500x. In 100 years, it'll escalate 1,000x, which means that your currency will lose 99.9% of its value against property, scarce desirable property over 100 years. That's assuming about a 7% monetary inflation rate. It looks like the US is running 15 to 20% monetary inflation rate. You can keep track of the strength of every other currency. So if the Great British Pound lost 13% against the dollar, then you're up to 33% inflation rate. And of course, with Turkish lira, you're much harder, much higher inflation rate. So silver, gold, lumber, oil, homes, real estate in general, they're all subject to supply demand elasticity. And when the demand increases, the supply is going to increase. That's why a lot of people they actually prefer branded items controlled by monopolies. I think they probably almost believe that Ferrari and Rolex are more reliable. They'll keep the supply capped. Like it's not likely that a random suburban ranch house in middle America will have a cap supply because there's no single monopoly or brand organized or brand controller to keep that supply from getting out of control. So the general strategy when you're staring at inflation is I want to acquire scarce desirable property. So I think in short, commodities are increasing in price right now. Oil, wheat, soybeans, natural gas, all of those have surged in the past 12 months. You'd like to hold a commodity that you can hold forever, that it has a supply that is inelastic to the demand. It's kind of hard to dollar cost average into a skyscraper, right? I mean, the average person can't buy $387 a month worth of a skyscraper. So it doesn't quite work. You can't buy $200 a month worth of the New England Patriots either. So certain things that look like long-term trophy assets don't work for the average person. You can't stockpile oil for a decade either. I know, I thought about it, when oil got to $0 a barrel, there was a point when it was free. If you had Bitcoin with a counterparty like Voyager or Celsius, they might very well block you from withdrawing it. So Bitcoin is desirable because it's portable, it's global, it's scarce, and you can duck a counterparty you don't trust. You can transfer it to a different counterparty, or you can take personal custody. And that's why it's a useful asset right now. And it ought to be part of people's portfolios. And I can't think of anything better, right? I mean, there are other things you can own, other assets. You can own Apple stock, you can own Google, you can own a building in Los Angeles, and you can own the New England Patriots. Well, you can't, right? I can't, right? But the things that you could own, they're challenging to own, they're expensive to maintain, they're not necessarily portable and universally desirable around the world. And we know that the inflation rate, the CPI inflation rate, is running 8%, while those mortgages are 2.75%. So if the actual monetary inflation rate is in excess of the mortgage rate, and if you can afford to hold that duration, if you don't need the money for 3, 4, 5, 6 years, then you should take the mortgage. Now, once you take the mortgage, I would say it would make sense to buy a lot of things with it, right? Buy a car with it if you need a car. If you have a portfolio of assets that you want to hold and you can borrow money at 2.75% interest, I think any portfolio of scarce desirable assets makes sense to hold with a 2.75% mortgage. Now, if you had asked me the question today, well, now mortgages are 575 basis points. So I suppose the negative is the 30-year mortgage rate has doubled. The positive is Bitcoin is less expensive. So I think the Bitcoin looks less risky when it's trading around the 4-year simple moving average. So that's a plus. I think the mortgage looks more risky because the cost of capital is doubled. Well, I think that Bitcoin is the first and the greatest and perhaps the only digital commodity. And a digital commodity means not a security. It means not without an issuer. So in a world where we're going through a digital transformation, you want a digital commodity to serve as the base layer. Because if I can put billions of dollars into a digital commodity on a layer one, then I can move it on a layer two or layer three or layer four at the speed of light, friction free, and I can store the money for 100 years. Rules for crypto securities. What's the disclosure required on a crypto security that's got an issuer? Right? We don't really have those rules. There's a lot of controversy and uncertainty about what they will be. So if you want to invest in technology, right, invest, right. And by the way, when I talk about Bitcoin, I'm talking about saving. I'm actually converting money, a currency, into a commodity. I don't see. If you said to me, what are the other commodities that I might choose in lieu of Bitcoin? Gold, lumber, land, real estate, right? Oil, natural gas fields, right? Those are commodities in lieu of Bitcoin. That's what it competes with. If you were to say, well, do I want to invest in a technology? Well, what's Solana and Cardano and ETH are competing with each other in the technology realm, but in essence, they're private equities. If I went beyond that, I would trip, I think, the SEC 40 Act, and I become an SEC 40 financial company. And now I've got to I've got to transform the business. And when that happens, you lose the ability to operate the rest of the business. So it's pretty catastrophic, right? So there's a pretty good reason why you want it to be a commodity. The second reason is you don't want an issuer. If there's an issuer, then that means there's a management team, and then it's a security. And if it's a security, it's subject to SEC rules. And then you have all sorts of securities liabilities about what you can say, what you can do, how you can handle it. Now, as a general rule, most bonds are securities, and most equities are securities, and private companies are securities. It turns out that sovereign debt of the United States is a carve out because the United States issued it, and that gets an exemption and is treated as a commodity, not as a security.